Hello, friends. SSA just created a question. Not the kind of question that gets answered in a press release or explained in a letter that arrives in your mailbox before the consequences do. The kind of question that shows up quietly, in a deposit that looks different from last month, in a Medicare deduction that seems higher than it should be, in a benefit calculation that does not quite match what you expected when you planned your retirement around a specific monthly number. Millions of retirees are sitting with this question right now. Most of them do not have the language to articulate exactly what feels off. They just know something changed. Something in the way SSA is processing their account, calculating their benefit, or applying deductions to their deposit shifted, and nobody from the Social Security Administration called to explain what happened or what they should do about it. That is the question SSA created, and today I am going to answer it. I am going to tell you exactly what SSA did that created this question for millions of retirees, which specific categories of people are sitting inside it right now, what the dollar impact looks like when you trace it across months and years of retirement income, and the precise steps that turn this question from something unsettling into something you have already handled. Stay until the very end, because the last category I cover today is the one where SSA's new question has the deepest roots. People who have been asking a version of it for years without realizing the answer was always available, and the only thing missing was someone pointing at the right door. And if SSA Now is the channel that takes the questions SSA creates and turns them into answers you can actually act on, subscribe right now and turn on the bell. SSA creates questions on a schedule. This channel answers them before the consequences of not knowing compound into something larger than they needed to be. Let me start with what SSA
did and why it created a question for so many people simultaneously. The Social Security Administration recently implemented a series of processing and policy changes that collectively altered the way benefits are calculated, adjusted, and deducted for a broad cross-section of the current retiree population. The changes did not arrive as a coordinated announcement. They filtered through different SSA systems at different times and are landing in accounts in a way that feels, from the outside, like isolated individual issues rather than a pattern with a common origin. But there is a common origin, and understanding it is what allows you to go from asking the question to knowing the answer. Here is what SSA did across 4 specific areas, and here is the question each one created for the retirees it touches. The first area, how SSA is now processing earnings-based benefit adjustments for retirees who worked after claiming. The question this created, why has my benefit not increased even though I worked last year and my income should have replaced a lower year in my calculation? Here is what happened. SSA updated its internal routing system for post-claim earnings reviews, the process that determines whether your recent working income qualifies to replace a lower earning year in your top 35 and trigger an automatic benefit increase. Under the updated routing framework, a portion of accounts that previously processed through automatic adjustment are now being directed into a manual verification queue. These accounts do not receive automatic increases until the manual review completes. The review timeline varies. There is no notification sent to the retiree that their account has been routed this way. The expected increase simply does not arrive, and the retiree is left wondering whether the system made an error or whether the increase was never coming. The answer to the question is not that SSA made an error necessarily. The answer is that your account may be sitting in a verification queue right now, and the only way to find out is to ask directly. Log into ssa.gov and verify that your most recent working years have posted correctly to your earnings record. Then call SSA at 1-800-772-1213 and ask specifically whether your account has been routed to manual earnings verification and what the current timeline for resolution looks like. That question, asked directly in those specific terms, moves your account into active status in a way that passive waiting does not. The system responds to contact. The queue does not self-prioritize for accounts that are simply waiting quietly. Second area, how SSA is applying IRMA surcharge tiers using 2024 income data and what the interaction with life-changing events now looks like. The question this created, why is my Medicare deduction higher than my neighbors when our incomes feel similar, and is there anything I can do about it? Here is what happened. For 2026, SSA is using 2024 Modified Adjusted Gross Income to determine Medicare premium surcharge tiers. The surcharge, called IRMA, adds anywhere from $74 to $443.90 per month on top of the standard $185 Part B premium, deducted automatically from your Social Security deposit. The tier assignment happened based on a tax return that may no longer reflect your financial reality, specifically if your 2024 income was elevated because of a one-time event that does not recur. What SSA did in this area is issue clarifying guidance confirming that the SSA 44 life-changing event appeal process produces an immediate tier reassignment upon approval rather than waiting for the next annual review cycle. This clarification matters because many retirees who were aware that SSA 44 existed assumed the timeline for seeing a deposit correction was long enough to make the appeal feel like a distant solution rather than an immediate one. The clarification changes that assumption directly. A properly documented SSA 44 filed today. Documenting a qualifying life-changing event, such as retirement, a property sale, a divorce, a significant reduction in work hours, or the death of a spouse since the 2024 tax year, can produce a Medicare deduction correction that appears in your deposit within the current processing cycle rather than months from now. If your Part B deduction exceeds $185 per month and your 2024 income was higher than your current income because of a specific one-time event, SSA 44 is your answer to the question SSA created. Download it at ssa.gov. Document your specific event with clear supporting evidence. File it. The clarified timeline makes acting now meaningfully better than acting later, and every month the surcharge runs unchallenged is a month of overpayment with no retroactive refund once the correction finally processes. Drop a comment right now and tell me, has your Social Security deposit felt smaller than it should be recently without a clear explanation from SSA? Because what I hear in those comments tells me exactly where to focus next for this community. Third area, how SSA is handling the transition between benefit types for retirees who may be on the wrong benefit and do not know it. The question this created, am I collecting the right Social Security benefit, or is there a different option available to me that would pay me more every single month? This is the question SSA created for a very specific group of retirees, and it is the question most of them have never thought to ask because nobody ever told them the option existed in the first place. Here is what SSA did. The agency issued updated counseling guidance to field representatives around how benefit type comparisons are presented to retirees who contact SSA, specifically surviving spouses who may be collecting either a survivor benefit or their own retirement benefit without ever having had the alternative option clearly explained to them. Under the updated guidance, SSA representatives are expected to present both options proactively and document that the comparison was offered. What this created for the surviving spouses who made their benefit election before this guidance was in place, which includes a very large number of people collecting right now, is a straightforward question. Was both my benefit option and my survivor benefit option clearly explained to me when I made my election? For most of them, the honest answer is no. And the updated counseling guidance creates a basis for going back to SSA and requesting the comparison that should have been offered originally. The survivor benefit for a widow or widower at full retirement age is up to 100% of what the deceased spouse was receiving, including any delayed retirement credits they accumulated before they passed. In many cases, that number is significantly higher than what the surviving spouse is currently collecting on their own retirement record. In other cases, the optimal strategy involves collecting the survivor benefit now while letting the surviving spouse's own retirement benefit grow toward age 70 when it reaches its maximum, then switching to capture the higher amount permanently. The specific right answer depends entirely on individual numbers, current age, both benefit amounts, full retirement age, and how each option interacts with the other over the remaining retirement timeline. SSA will pull all of those numbers for you if you call 1-800-772-1213 and ask specifically for a survivor benefit comparison review. That call is free. The difference between the wrong benefit election and the right one can be several $100s per month, permanently, for every month remaining in the surviving spouse's life. If you are a surviving spouse and you are not certain that both options were clearly explained to you when you first contacted SSA, the question SSA created for you has a straightforward answer. Make the call, request the comparison, find out whether the benefit you are collecting is the one that serves you best, or whether a better option has been sitting there quietly, uncollected, while you accepted the first number SSA offered.
Fourth area, and this is the one I told you to stay for, how SSA is now handling cases where retirees believe their base benefit calculation was wrong from the moment they first filed. The question this created, what if the benefit amount I have been collecting for years was never right, and what can I do about it now? This is the deepest question SSA created with its recent decisions, and it is the one that has retirees looking most carefully at their own history, because the implication that a benefit calculated incorrectly at the point of filing has been running at the wrong number ever since is both more common than most people realize and more addressable than most people assume. Here is what SSA did. The agency issued updated guidance around the reconsideration process for retirees who believe their base benefit calculation contained an error at the time of initial filing. The updated guidance specifically addresses how SSA handles cases where the disputed element is an earnings record year, a year that the retiree believes was recorded incorrectly and was therefore incorporated into the base calculation at the wrong figure. Under the previous standard, a retiree challenging a base benefit calculation was essentially required to prove SSA's error against SSA's own records, a process that placed most of the evidentiary burden on the retiree. Under the updated guidance, SSA has shifted more of the verification responsibility internally, meaning a reconsideration request now triggers an SSA obligation to actively review the underlying calculation for accuracy, rather than simply defending the original determination. What this means for the retiree whose benefit has always felt slightly lower than their earnings history should have produced, the updated reconsideration standard makes raising that question formally more accessible and more likely to result in a genuine review than it would have been under the previous framework. If you have ever looked at your monthly benefit and thought the number was lower than your working history deserved, that instinct deserves a formal response now that the reconsideration standard has shifted. Call SSA at 1-800-772-1213 and ask to initiate a benefit calculation reconsideration based on a potential earnings record discrepancy. The date of that call establishes your retroactive eligibility date, meaning any correction that results from the reconsideration reaches back to the date you initiated the process, not the date the review completes. The longer that call gets postponed, the shorter the retroactive window becomes. The question SSA created in this area has a clock attached to it, and the clock runs whether or not you are aware it exists. Here's what connects every question SSA created across these four areas. None of them arrived with an answer attached. SSA updated its systems, issued its guidance, shifted its processing frameworks, and then waited for the people most affected to either figure out what happened on their own or absorb the consequences quietly without ever understanding what created them. That pattern is not new. It is the fundamental reality of how SSA operates. The system processes, the deposit changes, the question forms, and the retiree is left to find the answer in a phone queue, a government website, or a video like this one. SSA now exists so that the answer arrives before the question costs you something. So here is what to do today. Log in to ssa.gov and verify your earnings record for every post-claim working year where a benefit increase should have appeared but has not. Then call SSA and ask whether your account is in manual verification. If your Part B premium exceeds $185 and your 2024 income included a one-time elevation event, download and file SSA 44 today under the clarified immediate reassignment timeline. If you are a surviving spouse who has never had both benefit options clearly compared, call SSA and request that comparison under the updated counseling guidance. And if your base benefit has always felt lower than your earnings history should have produced, initiate a reconsideration request today and establish your retroactive eligibility date before another month passes. 4 questions SSA created, 4 answers sitting right here. SSA created a question for millions of retirees. You just found the answer. If SSA now answered something today that SSA itself never explained, subscribe to this channel and turn on the bell. Every question SSA creates without answering, I find, I trace, and I answer here in plain English before the consequences of not knowing compound further. And share this video with someone you know on Social Security right now. They are probably sitting with the same question. Whether they find the answer today or months from now is a difference that matters.